momentum on the markets this Monday could be the results of media reports that Washington will not impose tariffs on specific sectors next month. Let's bring in Kevin Burkett. He's a portfolio manager at Burkett Asset Management and joins us to talk about this. Kevin, thanks for your time.
Good afternoon, Marilla.
So do you think investors are reacting at all to this report that could be sort of looking down the road at April 2nd and saying it's not going to be as bad as we thought it was?
Quite possibly. Today's updates coming on the back of reports that Trump plans to unveil a more targeted as opposed to some of the initially proposed broad-based tariffs. Those were initially rumored over the weekend, and I know at around late market hours today, Trump came out with some comments that seemed to support that was the direction he was going to take. So I think that drove the strong start and close.
I'm wondering, Kevin, about the election season now being on in Canada. Typically, do the markets respond to that? Could Canadians in this case be embracing the fact that there is a race to see who's going to be the next leader for the country?
Not that's had immediate impact. I mean, as you say, yesterday afternoon, Mark Carney called an election. So we now know that we're going to be headed to the voting booths on April 28th. So having some certainty there probably boosted markets slightly. Even if it wasn't particularly surprising to anyone. You've obviously brought me on at an important moment to be talking about the associated market impact of that. And I think what I followed most closely around those announcements was a lot of the U.S. Trade policy response. And I know Carney himself telling supporters that he's not going to let Trump and the U.S. break us and own us. So already we see an escalation, this time on our side, of this incendiary type rhetoric of recent weeks that we've been hearing from Trump. Clearly, no candidate wants to appear weak in dealing with the U.S.
Absolutely. But I'm wondering if you think we might get more specifics after that April 2nd announcement out of Washington, because the election falls with the tariff deadline right in the middle, right? And you're going to want to see the party leaders respond in a very concrete way. So what do you expect?
Well, I think what I expect to see is that this trade issue is more likely to be politicized during this brief but critical election period as opposed to resolved. And so the impact on markets is sure to be more volatility. I mean, today's update, which came on the back of what were initially sort of rumors over the weekend around Trump changing his plans, I think we're going to see more of that in both directions. Today was to the benefit, but where this back and forth public discourse takes us is at this time anyone's guess.
So we've been in a bit of turmoil for the markets for the start of the year. February, of course, with the tariffs and the trade war, that's been a little bit of a heavier hit for a lot of the stock markets. I'm wondering about inflation for March and whether you think we will see some sort of reaction to all that's been going on for March.
Yeah, so inflation in March came in a little higher than expected. It was 2.6% year over year, as opposed to consensus of 2.2. And so one of the impacts, you talk about the market impact, but we're also seeing some of this play out in currency market as well. And I think that widening gap between Canadian rates and U.S. rates is weighing on Canadian currency. And so what we're seeing is we're starting to import some inflation from our U.S. suppliers in the form of higher prices. So I think you've got challenges in the sense that you've got inflation and prices moving higher at the same time that we're seeing the economy come under broader weakness, which is mostly that so much of this jarring political discourse is very negative on future growth on both sides of the border.
Okay, so let's talk about stocks that you do like at this time. It's a bit of a harder pick considering everything that's going on, but you like RB Global. Tell me why.
Yeah, I think investors have got to be accepting of the volatility as opposed to trying to make precise bets on where things track. So when we think about a pragmatic approach, which, by the way, if and I come on BNN every quarter and the stories never seems to change, which is we're really looking for all-weather strategy names. This means stocks that aren't directly impacted by tariffs but can grow regardless. So, when I'm on, I'm usually talking about Loblaws, Dollarama. Last time was CAE, Intech. All these names have strongly outperformed, and I think we've got virtual certainty that continues at least until the Canadian election resolves. So when we talk about businesses that can both grow but that aren't directly impacted by tariffs, for me, Ritchie Brothers is an interesting counter-cyclical name because during economic slowdowns, we expect that the transaction volumes, which get boosted by increased supply, more than offset weaknesses in pricing. So I think when people are thinking about capital goods spending generally, and they're thinking about the manufacturers or some of the dealers, I think Ritchie Brothers plays to an interesting segment that can actually benefit if we start to see some of this macro weakness that's continuing to haunt us in the data come to pass.
Okay, let's talk about Andlauer as well. You like Andlauer. Can you give me sort of the reasoning behind that?
Same reasoning. It's got a combination of defensive and growth story behind it. It's, within Canada, one of the things when you're managing portfolios here in Canada, it's hard to diversify sectors. Healthcare in Canada for a long time meant marijuana businesses. Andlauer, you've got a sort of an idiosyncratic name. It's got all the typical benefits you'd expect from healthcare businesses in this form of strong moat from strict regulations around pharmaceutical transportation in Canada. And there's really very few other players in Canada that operate at a national scale. So you've got a business that itself isn't exposed to tariffs, is non-cyclical, and yet is finding ways to grow its business.
You're talking about exposure to tariffs, and again, not easy to understand or put into play because we don't know what's coming April 2nd. We have a little bit of an idea with steel and aluminum going forward. That's about it. But I'm wondering if you consider exposure to the U.S. to be a problem as well.
It depends on that nature of that exposure. You can have exposure, you can have a business that's within the U.S. and itself not exposed to cross-border tariffs. And I think, so Andlauer, for example, does have a U.S. business. That business disappointed a little bit last quarter, but I think we're cautiously optimistic that there's positive inflection coming this year. So when you talk about businesses like Andlauer, Ritchie Brothers, Ritchie Brothers made an acquisition March 11th, they announced, of JM Wood, which is an Alabama-based business. They didn't previously have a live auction site there. So you can operate on both sides of the border. What's at risk is where you have goods transiting that border in either direction. And I don't see direct exposures in either of these two names, which is why we like them.
Got it. Kevin Burkett is a portfolio manager at Burkett Asset